Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of chilies. Not to take a look at what's happening right at this particular moment, but to take a look at bigger structures. What happened in the last bull market, what's going on in this bear market, and whether or not we think there's massive potential in the next bull run. And as I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Don't forget to join us in Discord though. It is a centralized hub of everything that we do. It's the first place we go to notify everybody of what is going on in the crypto space. So don't miss a trick. Join us in Discord, linked in the description below. Okay, let's jump on down into the old desktop and take a look at what's going on here with chilies. We're going to just start off by talking about, just top line, what is chilies, right? Now, this video is not going to be a fundamental analysis. I leave that to Chris, so do join us in Discord if you're looking for more information on chilies from a fundamental point of view. But in a nutshell, it's basically about sports and entertainment. So chilies is a currency option for blockchain-based products and services geared towards mainstream consumers. We want to evaluate everyday experiences, fan engagement in entertainment, alternative payment solutions for conventional products, and so much more. Chili provides sports and entertainment entities with blockchain-based tools to help them engage and monetize their audiences. And, I think you're going to be living under a rock if you haven't already come across chilies with some of the things that they have been doing. Okay, but if you want more, obviously join us in Discord and I'm sure Chris will be able to point you in the right direction. We are here, though, to talk about the price action on the charts and specifically taking a look at what happened in 2021, where we are in 2022, and what that might mean for 2024 or 5 or whenever it is, right? 3, 6 months, 12 months, 24 months, whenever the next bull market comes. What does it look like? What does it think? What do we think is likely to occur here? With chilies, right? So let's actually start this off. In order for us to understand how high we can potentially go, we need to first of all, take a look back on what happened, right? What happened in 2021 and whether or not we're in a really good, strong point. Now, there's actually two different ways of looking at this. And I'm going to go with the one that's really obvious that a lot of people are probably going to be talking about, and that's going to be the 5-wave structure. So 1, 2, 3, all of this is a wave 4, and then we go up into wave 5, right? Now, there is some interesting things about this, okay? So when we have these kind of 5-wave structures, we need to be thoughtful over how far these things could potentially go and all those things. Now, when it comes to the Fibonacci relationships, we want to be considering, how long it takes for things to play out. And we are going to take a look at the fib based on time. Let's go ahead and just draw these on here. This gives us a rough idea as to how long things normally do take to play out and all that kind of stuff. Not a guarantee that this is exactly kind of how it would work, but this yellow line just over here, this would actually tell us that we should have completed wave 5 really by now, and we are not quite there yet. So we have a wave 1, a wave 2, a wave 3 pretty much aligned, all right, but wave 4 should have kind of completed, and we should have kind of moved on from here, right? So we aren't really perfectly following this one at all. So it's going to be interesting, right? It's still possible, but I think it's a long shot. Now, if this is the case and we are to expect 5 waves to the upside, then we'd have to think, are we done to the downside? And actually, the June lows look pretty good for chilies here. So the potential to the upside under this particular scenario would be set up here at the $1.67 through to about $4.24. That would be where you would expect that 5th wave movement to kind of finish. 167.7 to approximately 4.2446, okay, and you can kind of see it right in there. So I'm going to go ahead and remove that fib off, and I'm going to remove the wave counts. Okay, I don't like it, but it's not the best wave count going, in my opinion, but it is a possibility. So I'm going to leave that one up there. That's kind of scenario number 1. Okay, and this one's actually the most conservative, believe it or not. Although I don't like the wave counting on there, it does actually give us a reasonable target, a reasonable, realistic target that's not unachievable in my opinion. Now, the other option, of course, is that we are going into a free wave structure to the upside. And the reason for this is that we take a look at, this particular high point here, and we haven't really got a fifth wave movement as per the expectations, right? We should have come down here and then we should have gone up one more time. It should have looked like this: 1, 2, 3, 4, and then 5. We should have come up into a range and we should have been done, and then we could correct down, okay? But it didn't happen as we were expecting it to. So that means that this is only just three-wave movement, an A, B, and C to the upside, okay? Now, if this is the case, then we can talk about corrective moves to the downside and the potential for another move to the upside. So let's go ahead and talk about this bear market, right? Now we have an understanding that we are either in a three-wave move to the upside in the last bull market, or we are still in a five-wave move, which I don't like the count, but it's still possible technically. So we keep it there for now. Okay, so let's go ahead and talk about this. What do we have here? Well, we have a very overlappy kind of structure here, 3-3-5 by the looks of it. So we just have three waves coming down. So we just draw this in, 1, 2, and 3, just like that, or A, B, and C more specifically. We then have three waves going up, a lot of overlap. I'm just going to simplify this a little bit with those three waves. And then of course we have this three-wave drop here. Again, I'll oversimplify it just for the purpose of this video, and so that we can be sure of what's going on there. So we have these kind of three-wave movements. So this basically is a giant three-wave move, right? 3 down, 3 up, 3 down, and then we're over here. Now over this side here, we have a very interesting kind of structure. So we have our low point. So I'm going to put a horizontal line just down here, and I'll make this yellow. Okay, so this basically was our low at 8.11 cent, and this was the Saturday, the 18th of June. This was the bear market bottom, as many of the influencers were calling it back in June, July, and August. Essentially, though, if we take a look at the patterns of data here, what do we see? Well, we can see ourselves with an expanding flat correction, it looks like, potentially in here. Very, very rapid movements down on this side. I don't want to talk about this too much in the ins and the outs of it, but I did want to kind of focus on here to say that we had this interesting kind of five-wave structure point up into this move. So it does look like we've gone very nicely here with a 1, 2, 3, 4, and 5. Okay, then we come here with what looks like and appears to be a irregular flat correction. Okay, and then we have this movement to the upside here and rapid decline again. Now we have come down lower, so we're looking at potentially a really complex wave 2 situation or a B wave situation here. So I'm just trying to get my head around exactly what this looks like. But if we've gone up, come down, and we've running move up here, we haven't finished this yet. I would say that we've still got potential to move this quite a bit. So we want to kind of keep a close eye on that. But essentially, if I actually go ahead and actually delete these micro counts off and just think about this entire structure, what is the possibilities here? Well, we've got two different possibilities with this bear market so far. Let me delete all of this, and we'll just focus in on the basics, right? Which is that you've gone here with a basic three-wave structure, and now we're looking at the reversal. We're looking for that fifth wave movement potentially, right? And we're going up into this yellow box, right? That would be one scenario. Okay, that does tie in quite nicely with our kind of narrative of maybe there are 5 waves to the upside, and we're just looking to start the fifth wave at the moment. And what we're actually doing here essentially is 5 waves, since 1, 2, got to come up here, 3, 4, and 5, right? And therefore we don't break down lower than the existing low under this particular scenario. Now, if we do break down lower, then that's not what's going on, and instead we end up with our 3 waves up, and actually what might actually end up being a WXYXZ movement to the downside. And this would actually be more like this: W, X, Y, X, and Z. And this would take us down slightly lower than the June lows, and then we can talk about moving upwards. Okay, so if I go ahead and draw on here the fibs, and we just draw in our expectations on this, just to give us a bit of an idea as to kind of where things could potentially go. There we go. I'm going to be targeting out here at probably about 5.9 on the lower side. I'm just going to draw a little line, or in fact I might actually do a rectangle. I'll do it a little bit broader as well. I'll take it to the 1.618, although I wouldn't necessarily expect it to go down that low. I'll be looking at that higher spectrum here, taking it in at about 5.9. So I've got to remove that. So this is where our kind of final Z wave potentially could go, and we could be looking at maybe a 5-wave finishing move here as well. So just going to keep an eye on those things. But for the most part, this here would be tying in with a new structure structure to the upside that would come in the next bull market, right? So if this is where we end up going in the bear market, then we can start predicting where we're going to go next. Okay, so the two kind of options are we're already moving up into that fifth wave movement. We could, of course, come down here, then that target does change anyway. Or we are, in fact, actually going to be moving and progressing on quite a bit more. So let's see if I can just get this snapped up the top there, which I couldn't. So let me just zoom in on this. What we'll do is we'll just pin this up on there we go, and we'll take this all the way down to our low point here. Okay, so from March 2020 through to the highs up here of March 2021. Okay, so 1 year. If we move this over, and we'll take that higher area of this yellow box, okay, so that 5.9 cent range, this would actually then show us moving up to about $14.72. Now that seems very, very high, but would be the 1-to-1 ratio. Now I do want to kind of just pinpoint a couple of things here. One, this is going to be a stretch target. This is going to be very optimistic. Down here, though, this yellow box area, our fifth wave movement from the other scenario, actually happens to coincide very nicely with the 618 and the 786. These are areas where I would be very comfortable in thinking the price has potential to go to. So this would be $1.79 through to about $4.52. So Chili's definitely seems to have this potential progression to the upside, and there's a lot of fundamental things happening as well, which obviously we're going to talk about, that could also help drive this a little bit further. So definitely very optimistic, I think, with the potential moves to the upside. Now, if I actually go ahead and just put a couple of dashed lines on these, so we're going to talk about here at 52. I'm going to have to just actually edit this up in the coordinates. So $4. 52.76, that's going to be on the higher side, and then on the lower side will be $1.79.41, 79.41. Okay, and what I'll do is I'll remove the fibs off there, so we end up with this kind of target. Now if we were to do this, and we'll kind of come down to about 5.9 cent, okay, and rally up, we're talking about 2,900% for the kind of lower side of that targeted range. We'll be talking about moving up to about maybe 7,400 to be reaching about that $4.52 area. And if we were to go after that stretch target, you're talking 24,000%. Now, I think that's incredibly difficult to do, but I do think there's definitely the potential to come up into some of these other ranges, right? So maybe not the full 100x there, but 20 to what did I say about? Let me bring this back up 1 second here. So yeah, about 20 to 75x maybe potential. So there's definitely some good kind of appreciation potential here with Chili's, in my opinion, under the technical kind of structures that are playing out. Obviously, we don't know exactly where the bear market's going to go just yet, but it gives us a bit of an idea as to kind of, you know, whether or not we want to be thinking about investing in Chili's during this bear market. So hopefully you have found this video useful and informative. If you have, smash that like button. I do appreciate that. If you're new to the channel, why not subscribe, tapping the bell, selecting all the notifications, and you will stay up to date with absolutely everything that we do here at Cheeky Crypto. And don't forget to join us down in Discord, linked in the description below. Until the next one, guys, have a fantastic day.